Alright guys, my name is Shervin, welcome to my channel. In this video, we're going to talk about the best real estate investments, namely REIT ETFs, that you can start investing into today. Now, REIT stands for Real Estate Investment Trust, and REIT companies are essentially companies that own hundreds of different properties which they rent out for profit. Now, these companies also allow investors to invest into a percentage of all of their holdings by buying their REITs. So when we refer to investing into a REIT, we're essentially talking about buying a portion of a REIT company and essentially owning a percentage of all those hundreds of different properties and getting a percentage of all those rentals coming in. Now, a REIT ETF is essentially an index fund of a bunch of different REITs all pulled together. This means that by investing into a REIT ETF, you're investing into a portion of tens if not hundreds of different REITs, which each of them include hundreds of different properties. So essentially, you'd be getting maximum exposure into the real estate market and minimizing your risk as much as possible. Now, if you watch till the end of this video, I'm going to walk you through which REIT ETFs are the best investments and how you can start investing into and making money from these REITs starting from today. Now, the first REIT ETF that we're going to talk about is called VRE and is provided by Vanguard. Now, Vanguard is one of the most reliable companies when it comes to index funds, and this REIT ETF is no exception. In fact, the best thing about VRE is that it is so diverse amongst different sectors that it is one of the safest real estate investments that you can make. Although this does mean that the rate of return is slightly lower than the other more daring REIT ETFs out there. Now, for the last 12 months, VRE had a rate of return of around 2.9%, which again is slightly lower than the competitors that we're going to take a look at today. But the good news is that the management expense ratio of this ETF is also lower than the other ones that we're going to take a look at, and this one is around 0.38%. Now, before we move on to the next REIT ETF, I just want to mention that if you're enjoying this video so far, do me a favor and smash the like button down below for the YouTube algorithm. Now, the simple act of you smashing that like button helps other people on YouTube find the video as well. So please take the time to do it, and I really appreciate your support. All right, with all that said, let's move on to the second REIT ETF that we're going to take a look at today, and this one is called ZRE. Now, ZRE is put together by BMO and is one of the more aggressive REIT ETFs out there. This is because it's mostly made up of real estate that is more volatile in price, but on the other hand has a higher rent percentage as well. Now, over the past 12 months, ZRE paid out 3.87% to all investors, and it only has a management expense ratio of 0.55%. Now, even though this is higher than VRE, it is still on the lower side when it comes to REIT ETFs. So overall, ZRE is one of the best REIT ETFs as far as distribution goes, but keep in mind that the volatility of this REIT ETF is a lot more closely tied to the volatility of the housing market in general. This means that it is a little bit more risky than the other ones, and if the housing market goes down as a whole, this REIT ETF is probably going to go down with it as well. So I would probably invest into this one because it has a very good yield, but I would be cautious about how much I'm putting into it just because of the risk factor. Now, next up, we're going to take a look at XRE, which is the iShares REIT ETF. Now, this one is one of the most conservative REIT ETFs out there, and in fact, I would say it's a little too conservative. Now, over the past 12 months, this REIT ETF produced a rate of return of about 2.67%, while still having a management expense ratio of 0.61%. This means that aside from capital gains on your investments, you're only coming out ahead slightly over 2% each year. Now, when you take into account that on average, inflation is about 2% a year as well, this really doesn't seem like a great investment. So even though this REIT ETF is much more conservative and a much more of a sure bet, I would just stay away from it just because the math just doesn't work out. Now, last but not least, we have REIT, which is the CI Canadian REIT ETF. Now, this one is on the other end of the spectrum and is probably a little too conservative. Now, over the past 12 months, REIT produced a rate of return of close to 4%, which is tremendous. But on the other hand, the management expense ratio is also quite high at around 0.75%. And this is mostly due to how aggressive this REIT ETF is and how hard it is to manage. But again, keep in mind, this one is very volatile and it will go up and down at a moment's notice with the housing market. Now, of course, every investor is different and everyone has a different tolerance for risk. But for me, myself, I usually try to stay in the middle. I just prefer it most when my investments are not too risky, but they're also not too conservative where I'm not making any money. So it's for that reason that I myself prefer VRE and ZRE much more compared to XRE and REIT. Now, I gotta say, VRE is also a little too conservative for my appetite, but given the fact that the management expense ratio is so low, and the fact that this REIT ETF is put together by Vanguard, which I trust the management of their index funds completely, I just have to invest into that one as well. But whichever you do end up investing into, it's very important that you keep them in your TFSA account. Now, this is because all the distributions that you receive from your investments are taxable except if you put them in a government registered tax sheltered account like the TFSA. Now, by holding these investments in your TFSA, you can get all those distributions without having to pay a single penny in taxes. But keep in mind that your TFSA only has a limited amount of contribution room, and you can only contribute that much and no more. So make sure to go on your CRA account and check to see how much contribution room you have left in your TFSA before investing into anything. Also, make sure you don't put these investments in your RRSP, because even though RRSP is also a tax sheltered account where you don't have to pay any taxes on any distributions that you receive, you really want to keep that RRSP room for US investments. Now, this is because the RRSP is the only account in Canada where all US withholding taxes are exempt, meaning that you don't have to pay any taxes on any US investments. So you want to save all that contribution room for US investments only and keep all the Canadian investments in your TFSA. Alright, so that's about it for this video. Hopefully you guys enjoyed that. Now, if you haven't subscribed to my channel yet, make sure to smash the subscribe button down below and join the community. I make 3 new videos a week on personal finance and investing, and by subscribing to the channel, you get to see all my new videos right as it comes out. Also, if you have any questions about any of the stuff that we talked about today, make sure to let me know in the comment sections down below, where I always answer every single question that comes in. Alright, so that's about it, and as always, thank you so much for watching, and I will catch you in the next video. Cheers.